China can't seem to stop Bitcoin mining, though. We reported on this last week. Reported hash rate fell to 0 for 2 months in China last year, but has since returned rather abruptly. Last week, Cambridge University's Cambridge Center for Alternative Finance, CCAF, released an update to its heavily cited, and rightfully so, Cambridge Bitcoin Electricity Consumption Index, which in part looks to uncover and share the geographic location breakdown of Bitcoin miners globally. The previous Cambridge update showed that China's share of mining went from 34.3% in June of 2021 to 0% in July of 2021, following a crypto mining ban in the country. Last week's update showed that China's share of mining went from 0% in August of 2021 to 22.3% in September of 2021. Clearly something is up here, so let's dive in. While we are there, we'll also touch on 2 other Bitcoin mining related topics, hash price and mining company woes. And these 2 we've kind of been covering. I'm just going to go ahead and say I think I know what we're going to be taking a look at here, which is price per hash rate going up, right? I'm assuming. And then, of course, mining companies basically reducing shares, not utilizing public funding or anything like that to purchase more equipment and moving towards more debt. Those are, if I had to take a guess, and I haven't read the rest of this article, so let's get into it. China. China banned Bitcoin mining in May of 2021, and it showed up in the data. By July, there were virtually no miners or mining in China. None in August either. Then in September, almost all the miners who left came back. At least that's what the data shows. Here's the evolution of mining country share. And then I believe you got this big purple one, United States, blowing up. And then now this yellow one is China. And it went boom, boom, right there. You see it? You see it? Perhaps it's not obvious, so I'll say it. That didn't happen. Moving mining operations isn't exactly easy, and I would tend to agree. The bulk of mining operations isn't a handful of hobbyists messing around. Bitcoin has long since graduated from that. Most miners are more properly characterized as commercial operations, paying triple net leases for warehouses, and depending on fancy power purchase agreements for electricity. Bitcoin mining operations look like this, and then they have a photo. The reason the data looks like this is due to the data collection method employed by the CCAF. The CCAF partnered with Bitcoin mining pools to collect geolocational mining facility data based on IP addresses. Pools allow a lot of different miners to contribute to mining, and the reward is then split among them according to their processing contribution to smooth out individual miner income. Therein lies the issue, and the CCAF warns as much, stating, quote, "It is no secret in the industry that miners in certain locations use virtual private networks or proxy services to hide their IP addresses in order to obfuscate their location. Such behavior may distort the sample and result in an overestimation or underestimation, a grossly underestimation in this particular case, of hash rate in some provinces or countries." Totally makes sense. So the real story: 1, Chinese miners were afraid that the government crackdown was serious, so they lied or spoofed their location data and moved underground. 2, after some time, Chinese miners realized, hey, this doesn't seem that scary, so they felt comfortable sharing their real data. That's it. Like I suggested, actually quite boring. That's not really the whole truth, though. The most visible Bitcoin mining operations or operators did move at least part of their operations, and the growth of non-China, mostly US located mining is well documented. To highlight that, the hash rate computational power of the Bitcoin network has grown 40% since the China ban. The CCAF, recognizing the oddity of the data, published a wonderfully titled blog post about their update, leaving us with this, quote, "Most notably, however, is China's apparent comeback. Following the government ban in June of 2021, reported hash rate for the entire country effectively plummeted to 0 during the months of July and August. Yet reported hash rate suddenly surged back to 30.47 exahash a second in September, instantly capitulating China to second place, or catapulting. I don't know why I thought it was going to say that. I like paused and I'm like, what? Catapulting China to second place globally in terms of installed mining capacity, 22.29% of the total market. This strongly suggests that significant underground mining activity has formed in the country, which empirically confirms what industry insiders have long been assuming. The operative word here being reported. So yeah, it turns out that China can in fact ban Bitcoin mining again. Here's to more China FUD, fear, uncertainty, doubt in our future. Alternatively, maybe everyone is messing with us and using VPNs to change their location to China to make my job difficult. And that would be kind of funny too. Amid falling Bitcoin prices, there is also some concern around Bitcoin miners and their profitability. There is a metric developed by Luxor Technologies called hash price, which represents the expected value of mining. Hash price is expressed as $1 per terahash per day, a terahash being the computational power provided by mining equipment. Here's how the last month has fared for hash price. It looks like it's going down, so that could be good news, right? Right? It's been going up for a long time. Hash price has trended down due to 1, the USD price of Bitcoin falling, and 2, more miners coming online, and 3, subsequent increased network difficulty. So, all right. Okay. I don't think that this is specifically, this is hash price is the expressed as $1 per terahash per day, a terahash being the computational provided. So that's the amount they're making, right? What I thought we were going to see was the price of the price of terahash on a unit, right? So not exactly rosy, but it makes sense. And the decline is acting as forcing function for mining operators to buckle down or shut down. Many industry practitioners are warning that this is the time when only the strong will survive. I tend to agree with that. In theory, miners turn off their machines whenever Bitcoin prices drop significantly, and it becomes unprofitable to keep them running. This time, even though hash price has decreased, we haven't seen this sort of drop off, and we've been talking about this a lot. So just kind of confirming what we've been talking about on this channel for the past month or so. And it is what it is. It's interesting. Public miners have all publicly repped to something along the lines of, quote, "We are mining Bitcoin. We want to mine more Bitcoin. We are going to hold as much Bitcoin we mine as possible, and we're going to use other sources of capital to fund operations and growth," end quote. That could be fine, but as these miners feel more pressure, there are potential obligations to capital providers they might have to answer to. On top of that, if the market gets worse, these companies may need to do something like start selling their Bitcoin. These aren't companies with the balance sheets of Apple or Google. They're more closely resemble startups that happen to trade on the public markets. All said, there is no particular reason to worry about the mining industry as a whole. Bitcoin mining will be fine, but the cast of characters might change since the capital markets are available up until the moment they aren't. Bitcoin will be better for it, but there might be some pain coming at the company level. And I tend to agree, and I think that it is needed. And really, honestly, to a certain extent, the market downturn, the crypto winter, the bear market, in my humble opinion, from the miner's perspective, and if we take into consideration, essentially the distribution of hash rate, the way the mining companies are functioning and so on, this needs to happen so we can weed out some of these companies that took large amounts of money from the public to build their mining operations. And if they took bad loans and investments, then that is also something that they need to answer for, right? In their models, I would be surprised, at least the good ones, the good models should have basically had some sort of worst case scenario for the bear market. And if they didn't, I'd be shocked, frankly. But, I don't have any insider info on any of these large Bitcoin mining companies per se. I hope you enjoyed this clip from the Crypto Mining Morning Show every Monday through Friday, 7:45 a.m. Pacific and 10:45 a.m. Eastern Time. You can check out more clips here, or if you're interested in checking out the entire live show, you can check that out down here. Thanks for watching, and I'll see you next Tuesday.